What if I told you the Singapore stock market is about to get a massive $5 billion supercharge? That's right. The Monetary Authority of Singapore, or MAS, is injecting billions of dollars to wake up a sleeping giant, its small and mid-cap stock market. For years, these smaller, dynamic companies have been overlooked, overshadowed by the big players. But that's all about to change. In this video, we're going to break down exactly what this massive program is, which 5 companies are perfectly positioned to ride this wave, the incredible opportunities this unlocks for investors, and, just as importantly, the risks you absolutely need to know about. And before we dive in, a quick but crucial disclaimer. This video is for informational purposes only and is not financial advice. All investment decisions should be made after consulting with a qualified financial advisor. Now, let's get into it. So, what is this big plan called? It's the Equity Market Development Program, or EQDP. For a long time, Singapore's stock market was known as an illiquid safe haven. That's a fancy way of saying your money was safe, but it was dominated by a few huge companies. This made it tough for smaller but equally strong local companies to get the investor attention they deserved. The EQDP is designed to fix this. MAS has started by giving an initial $1.1 billion to 3 top-tier asset managers, Avanda Investment Management, Fullerton Fund Management, and JP Morgan Asset Management. This is just the first step, as the total commitment is a staggering $5 billion. Their mission is clear: inject this money into the market with a significant focus on small and mid-cap stocks. The goal is to deepen liquidity, meaning it's easier to buy and sell shares, and improve price discovery, ensuring these companies are valued fairly. But it's not just about the money. MAS is also spending $50 million to boost equity research, especially for these smaller, under-the-radar companies. It's a full system upgrade designed to build a more vibrant, transparent, and trusted market for the long haul. So, where is this money likely to go? Analysts have identified companies that fit the profile of local champions, turnaround stories, or value-up opportunities. Based on extensive research, here are 5 companies that are repeatedly flagged as potential beneficiaries. First up, Food Empire Holdings, SGX F03. Food Empire is a global food and beverage powerhouse, famous for its instant coffee sold in over 60 countries. Why them? They are a true local champion, expanding aggressively in high-growth Asian markets like India. They recently smashed the $1 billion market cap milestone, getting them on the radar of big fund managers. Next, we have ISOTEAM Limited, SGX 5WF. Think of ISOTEAM as the ultimate building maintenance crew for Singapore. They handle repairs and redecorations for town councils and government bodies. Why them? Their work is essential and recurring, giving them a stable, long-term revenue stream. They have a massive order book of over $188 million. Plus, they are innovating, using AI-powered painting solutions and drones to boost productivity. Third on our list is CSE Global, SGX 544. This is a global engineering group specializing in automation, communications, and electrification. Why them? This is a value-up story. Through smart acquisitions, they are shifting their focus to high-growth areas like smart grids and renewable energy. They are transforming their business to align with global sustainability trends. Fourth, let's talk about UMS Integration, SGX 558. UMS is a key player in the semiconductor supply chain. Why them? They are in the perfect position to ride the current semiconductor upswing. More importantly, they've secured a huge new customer that could add up to $300 million annually. This makes UMS a prime turnaround candidate with explosive growth potential. And finally, number 5 is Frencken Group, SGX E28. Frencken provides high-tech manufacturing solutions for a range of advanced industries. Why them? Their semiconductor segment is on fire, and they are seen as a second-order AI beneficiary, meaning they profit from the AI boom. They are aggressively expanding their manufacturing capacity in Singapore and the US to meet this incredible demand. This program creates 4 huge opportunities for the market and for investors. 1. Enhanced liquidity and visibility. More money flowing in makes it easier to trade these stocks, which in turn attracts more investors. As one expert noted, this new buying power can move mountains, helping undervalued companies achieve fair valuations. 2. The potential for a massive valuation re-rating. For the last 5 years, Singapore's small-cap index has been flat, while the large-cap index soared over 40%. There's a huge gap to close. Morgan Stanley even projects that Singapore's main equity index could double in value by 2030 as this program ignites investor confidence. 3. A strengthened and healthier market ecosystem. With more funding for research, investors can make better informed decisions. This transparency, combined with a pipeline of new companies, creates a more dynamic and trusted market for everyone. And 4. Powerful government commitment. The EQDP is not a standalone policy. It's part of Singapore's whole-of-government commitment to solidify its position as a top-tier global financial hub. Now, let's be realistic. High-potential returns always come with risks, and it's critical you understand them. First, small-cap inherent risks. These stocks are more volatile than blue chips. An earnings surprise can send a stock soaring or sinking by 30% or more. Second, broader market and economic risks. Singapore is a global hub, which means its companies are exposed to global problems. Geopolitical conflicts, trade tensions, and a higher-than-longer interest rate environment can all impact performance. And fourth, EQDP execution risks. The program's success isn't guaranteed. It relies heavily on the ability of the fund managers to attract additional private investment. If that multiplier effect doesn't happen, the impact could be smaller than hoped. And finally, company-specific vulnerabilities. Every company has its own unique challenges. This highlights why you must do deep research on each individual company. So, what's the bottom line? The Monetary Authority of Singapore's Equity Market Development Program is a game changer. It's a powerful catalyst designed to unlock the hidden value in Singapore's small and mid-cap market. The 5 companies we discussed are all examples of businesses with strong fundamentals that are well-positioned to benefit from this renewed focus. But this isn't a get-rich-quick scheme. The opportunities are real, but the risks are also real. Success here requires a long-term perspective, diversification, and most importantly, thorough due diligence. The long-term outlook for Singapore's equity market looks incredibly promising. With strong government backing and a strategic push to become a global innovation hub, this could be the dawn of a new era of growth. Remember, this video is for educational purposes only. Always do your own research and speak with a qualified financial advisor to determine what's right for your personal situation. Thank you for watching. If you found this breakdown helpful, hit that like button, subscribe for more deep dives, and let me know your thoughts in the comments below. See you in the next video.